Welcome to today's daily report market analysis videos on Tuesday the 10th of September with me, Richard Perry, market analyst at Hantec. We've got a relatively flattish open, I think you could say today. A little bit of a risk reversal, just slightly pulling back on the recent moves that we've seen on equity markets higher and the risk improvement that we've seen. But it's interesting to see that gold is still under pressure. And also the yen and gold, two classic safe haven plays, still falling as they have done in the last few days. And we've also seen that treasury yields are again, although they're at the low of the day at the moment, they're still up from yesterday's close on the 10-year and the 2-year. So this whole attitude where the safe haven assets are still sort of looking corrective is still in the market, really. A little bit of a slip back on equities sort of takes the shine off the risk rally, but generally speaking, we're still seeing that move. Also looking at the oil price, which has broken the consolidation band, broken the downtrend, consolidation also in the last month or so, that's broken to the upside on both WTI and Brent crude. And they're looking increasingly positive. Again, a reflection of the improved risk appetite that we see through markets. The main mover on forex markets today is sterling. Sterling flying around still on Brexit news and uncertainty surrounding how Brexit is going to play out. It was trading higher this morning by about 10-15 pips. It's now sort of 30 pips lower. So it is still flying around, and that is affecting FTSE 100 certainly. A little bit of an outperformance on FTSE 100, although not significant. That negative correlation play between FTSE and sterling still a factor. So in terms of what we've got to look forward to today, data points wise, you've got UK employment data at 9:30. Where is it? There. UK data points. So let's go to UK data at 9:30. Expected to see unemployment staying at 3.9% and average weekly earnings staying at 3.7% growth. So pretty decent weekly earnings growth numbers still there in at 9:30. Also looking out for the claimant count of 30,000 jobs. So that could be a market mover as well. But generally speaking, I think Brexit is still a key factor here for sterling moves. Into the afternoon, we've got the US JOLTS numbers is the only other real data point, and that is expected to see 7.31 down from 7.35 last month. So that takes me to my chart of the day, which is FTSE 100. Now, what we've seen is equity markets rallying strongly in the past week or so. FTSE 100 has not seen that. The chief reason behind that is this rally that we've seen on sterling. But the technicals on the FTSE standalone are increasingly turning corrective. You can see that the market has failed underneath the 144-day moving average, also failed under this resistance of overhead supply of the pivot band, 7315 up to 7370. Failed in that throughout last week, and again yesterday failing to break through that before the selling pressure came through. Yesterday's candlestick was a bearish engulfing candle, and it just really swings the market lower. It's also moved the market below this near-term pivot of around 72.30, 72.40. So closing just around that level and now pulling below that again today. It really does look as though that with the momentum indicators coming lower, you've got a sell signal now being confirmed on stochastics, MACD lines failing underneath neutral, RSI below 50 and falling. It really does sort of paint a more of a corrective picture, and you can see that through the hourly chart where this recovery in sterling has been consolidating for the past week but broken below the pivot support 72.30, 72.40, effectively topping out. And you can measure around about 100 pips of potential top pattern projected downwards. You'd be looking back towards that pivot, next pivot around 71.20, supports 71.60 area, 71.85 area. But looking at the momentum indicators as well, hourly chart momentum, this is RSI turning more correctively configured, as are the MACD line. So it looks like that selling into strength is now sort of starting to come through on FTSE 100, and it really does look as though that this rally that we've seen throughout equity markets on major indices such as the DAX, such as the S&P 500, is not really showing through on FTSE, and it's beginning to turn corrective on FTSE. And that correction is gathering pace today. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our videos on YouTube, but also go to our website where you can sign up for our trading webinars. Thank you.